Hello everyone, and a very warm welcome to this ICAST webinar, Making Tax Digital for Income Tax, Time to Get Ready. For those of you who don't know me, my name is Chris Campbell, and I'm Head of Tax for Tax Practice and Owner Managed Business Taxes here at ICAST, and I have the pleasure of being your host today. Our event this morning will last approximately an hour. We will cover the latest developments that you need to be aware of on MTD for income tax. With just over a year until the first group of taxpayers will be legally required to keep digital records and submit quarterly updates to HMRC, it's certainly time to get ready if you've not already done so. MTD will mean that sole traders and landlords will be required to submit quarterly updates to HMRC from April 2026 for those with a gross income above 50,000 and April 2027 for those with a gross income above 30,000. Unless the business is exempt. The autumn budget not only reaffirmed these timescales, but announced the extension of MTD for income tax to sole traders and landlords with gross income over £20,000 by the end of this Parliament. In recent months, we've been providing our members with the latest information and resources to help you get ready. And please watch this space for the ICAST MTD Hub, which will be launched in our website in the coming weeks. Our MTD Hub will pull together the latest guidance to make it easier for you to access when supporting your clients with this important tax change. To help explain and understand the challenges that MTD for income tax will present, I'm delighted to be joined today by Craig Ogilvie, HMRC's MTD Programme Director. Craig has been with us before on the ICAST webinar that we ran back in the autumn and has enjoyed a UK government career spanning 20 years, holding several key roles specialising in digital and data transformation. Craig has played an integral role as part of several HMRC projects before moving to lead HMRC's flagship Making Tax Digital project as the Programme Director in late 2023. We were also due to be joined by Gemma Hope, who unfortunately can't be with us today. Craig will, however, be supported by Stephen McEwen from HMRC's MTD team, who'll be able to support with any questions you may have during the webinar. Before we begin, just a few housekeeping matters to remind you of. At the start of the webinar, you will notice our standard disclaimer. This webinar provides general commentary on the topic under discussion, and we expect our members to use their professional judgment and seek further advice as appropriate. You can submit questions at any time through the Q&A facility, which can be accessed at the top of your screen. Questions should be able to be submitted anonymously if you wish. The HMRC team may answer some of the questions, but we will go back over some of the key points at the end when we have a live Q&A session. Please also join the conversation today through the chat box, which can be accessed at the top of your screen. This allows you to comment or discuss issues with fellow attendees on matters covered by this webinar. We are, of course, recording this webinar and will make it available for on-demand viewing afterwards in case you want to refer back to it or share with others. And the slides will be available on request by emailing our events team at events@icast.com after the webinar. We look forward to receiving your questions throughout the course of the webinar, and we'll try to get to as many of them as we can. I just want to bring in Craig at this point. Craig, welcome to ICAST once again. It's great to have you joining us. You're a busy man at the moment.
Oh, just a little bit, but it's all good, Chris. And just so those viewing know, I'm actually coming in from Bathgate today. I'm suffering from an awfully sore back, so I've got the happy smiley face on, but secretly here I'm in a bit of pain. So if you see any grimaces, that's what it is. But I'm coming in from Bathgate today, and I think you and I will be together in Edinburgh over the next couple of days. We've got a big MTD event in Edinburgh as well. Looking forward to that.
Yeah, you've got quite a range of events that we'll be promoting on our website right across the UK in the coming months.
Yeah, I think we'll get into this today, but we need to just chuck the kitchen sink at this. I think the thing that's really clear to me is that accountants and agents across the UK are aware of Making Tax Digital, but are they ready? And that's the big question. We need to make sure people aren't just aware of the sort of high level stuff, that they are now taking all the practical steps to get ready. So lots of that will be led by professional bodies, led by software, or led by HMRC ourselves. But really, it's sort of my endeavour to chuck the kitchen sink at it over the next year to help people get ready, and we'll get into that absolutely today.
That's great, Craig. Well, I know you've got a few slides to go over the key points, but we can have a conversation later on once you've gone through the key points. Over to you.
Brilliant. That sounds good. Let me exercise my ability to take control of the IT. And Florian, if you can just keep me right, I've got a track record of not mastering Teams. Just let me check, is there a sort of strange picture of me in the screen right now? Is that working for everyone?
There is, yes.
Yeah, phew. Right, good. Right, so Chris gave me a really lovely introduction. Thanks very much for that. I genuinely enjoy working with all the professional bodies, and and absolutely I'm enjoying every time that I get to spend time with ICAST colleagues, but also members. So it's absolutely great to spend time with you. Let us know how today goes, because if Chris and I don't get this quite right, you've got two people that will listen in and adjust it for the next time. But the thing that I want to get across is that the director of the programme giving you all this high level stuff won't cut it from here on in. We need to be getting into the nitty gritty of what do the rules mean, what do you need to do to get ready, how do you segment clients, what are the considerations that you need to think about. So again, broad pair of shoulders, let us know if this works, because if it doesn't work, Chris and I will be the first people to adjust it and change it in the future. And as I say, while I'm doing a bit of presentation today, I also want to get to the question elements of it, and really get a bit of a conversation going. As Chris said, I've been in charge of Making Tax Digital from October 2023, and we've made good steps over the last year or so. It's a significant programme to deliver. There's lots of impacts in your community, and I want to make sure that we work on all of that together, whether you're in the software industry, whether you're in the accountants industry, whether you're a bookkeeper, or whether you're one of my team at HMRC. Collectively, how do we make sure people are ready for that, I think, is my number one endeavour over the next year. So let's just give you a bit of a reminder what Chris has said there. So the first thing is, from April 26, those with self-employed income or income from property over 50,000, and that is turnover, gross income, those with over 50,000 will be legally mandated to keep digital records and use approved MTD software to submit quarterly updates. And at the end of the tax year, before January 28, complete that end of year final submission. But we'll get into the bones of that today. So the first thing, as we touched on last time we were together, it is gross income, it is turnover. And it could be the scenario where you have 30,000 from property and 21,000 from self-employed income. That would mean that the cumulative amount is over 50,000, so you'd be legally in. The next big thing, and we'll get into a lot of this today, is it's based on the current tax year we're in at the moment. So that's April 24 to April 25. And that tax year creates your mandated state for April 26. Those are really important bits of information that if you take away anything from today, lodge those very sort of firmly in the brain. And it is based on this current tax year we're in at the moment, where you need to segment what clients may be in from April 26. So a lot of people say to me, actually, the tax year's not finished. How do I know? Well, the majority of people, we're confident based on historical data and based on what you know, you'll know the vast majority of those that will be mandated from April 26 already. But for those that you don't know that for, we'll continue to write to you and make that really explicit. So over the last few weeks, we've sent a letter out to accountants and agents to say you're likely to have clients who are in scope, and throughout April and May we'll be writing to those clients to say, based on the 23-24 tax return, based on your income and those income types, it's likely you're going to be legally mandated. So we've started the ball rolling on that already. The year after, as Chris says, April 27, is those with a turnover, a gross income over 30,000, and that will be based on April 25 to April 26, so same rules apply. If you're in Making Tax Digital and your income moves up and down, you're locked in for 3 years. But that 30,000 will be from April 27. And remember, it can be a combination of both income sources. And I'll get onto the income sources later in the presentation, and we'll try and align it to the current SA return to make that a bit easier. And also, as announced by the Chancellor within this Parliament, that will move to a gross income turnover over 20,000. So watch this space. So what is changing? My absolute desire is to make sure that everybody is clear that this is happening. And I think one of the things I'm most happy about is that the industry across the UK, both the accountancy industry, bookkeepers and software, I believe have moved to a position that they accept this is happening. So check in with you today. Do you believe it's happening? Or do you doubt that and it's just me saying it's going to happen? I think that's really important. I think the Minister's been really clear that this is happening, and I want to continuously share that confidence so that people don't put off getting ready. Now is the time to get ready. If you leave it much later for April 26th, then the challenge becomes harder and harder. So the fundamental change is it's about keeping digital records. It's about sending quarterly updates, and I've made a sort of huge statement on this over the last year. And if you can help me at all on this, these are not tax returns. They are unadjusted updates of income and expenditure. And if you're using software, that can make it that bit easier. And we'll talk about that, and we'll talk about how that works. They're also from April cumulative quarterly updates. So if you get it wrong, correct it in the next quarterly update. Thanks to feedback from many of you on here from ICAS, we have adjusted what MTD looks like over the last few years and making them cumulative updates rather than standalone with an error correction process. Everybody generally believes that makes the process a bit easier. So quarterly updates are not tax returns. You still do your final submission and declaration at the end of the year as normal, and we'll touch on that later. And the other thing is, whether you come into testing, and you'll hear a lot about that, I'm really going to encourage you to think about putting some clients into testing from April as we get into that final big year of testing, or whether you sign up and come into Making Tax Digital from April 26, you'll be subject to a new fairer points-based penalty regime, and we'll touch a little bit on that today. What I won't try and do today is get into a big debate about whether quarterly updates are a good thing, a bad thing, or somewhere in the middle. You know, I think I can describe that they are used for a whole host of reasons, and I'll touch on some of that today. But primarily, we're at a point where the UK has to get ready for this. So that's the key point, my focus. Oh, as always, you know, pop a follow on LinkedIn. Happy to have chats on there if you've got specific questions, or if there's things that you just don't agree with. You'll always find that I make myself accessible as the director of the programme. Happy to have conversations, and really happy to come out and see offices and firms across the country. I think that's one of the best bit of learning that the team and I can do, is actually come and see it in action. So don't feel it's just this session. There's lots of ways you can get in touch. So let's think about what compatible software is. So you've got a choice. You could technically pick one piece of software that's part of Making Tax Digital, can do all your record keeping, your quarterly updates, and do your submission. There will be that software available in the market, or you can choose to use multiple products. Many accountants in the industry at the moment use accounting products and use an end of year tax software to do the final return. We are not eroding any of that choice. That still remains a choice. And technically, a frequently asked question I get is, can I use multiple software to, for example, upload a quarterly update for income from property and from self-employed income? The answer is yes. It's an ecosystem. It works together, but that's your choice. We are updating our software choices pages to make that much easier for you. But a strong message today will be, speak to your software, make sure it's compatible. In terms of what digital record keeping are, we've tried to align this as close to the existing categories in SA at the moment. But as a minimum, these digital records are records of the financial information. They must be kept digitally, and they include dates, amount, and categories. To bring that to life for you, we've popped in some examples here in terms of self-employed income. And probably now's a good time to think about that eligibility. So in the as-is self-assessment return, if you're submitting self-employed income from the SA 103 box or SA 105 and 106, the property boxes, these are the income points that we will draw the data from to determine legal mandation. So for those that are used to the naming the boxes, it's 103, 105 and 106. And I think for lots of people that say, well, am I mandated because of dividends? Am I mandated? No, it's those two areas, self-employed income and income from property. And those are the areas that those digital records need to be kept for, and the quarterly updates, unadjusted income and expenditure done. When it gets to the end of the year, as you would do in the normal self-assessment return, you make any of your amendments, your accruals, and you report any other income as normal. That's a frequent question. So if you think back to those traditional boxes that accountants in the industry sort of tell me, that seems to help in terms of rationalise where we draw that from. And it probably answers about a third of the questions that I get. So I did mention new penalties. The first thing to say is I'm going to encourage you to come into testing, right? If you come into testing, there are no late submission penalties for quarterly updates, so you don't need to worry about that within testing. They are fairer, they're based on the accrual of 4 points, and I think it's a really positive reason for both joining testing and for migrating and having clients in MTD. It's a fairer points-based penalty system. In relation to when we go live in April 26, how we'll apply penalties, as I've said, they will be fairer. It'll be a choice for the minister at that point about how we apply those at the time. So watch this space. A few things on what isn't changing. Payment regime doesn't change. That's a frequent question. You still have to complete the full finalisation by the 31st of January. Now, I believe with quarterly updates and better use of software, for many that may be an easier process, and that sort of will remain to see how that plays through. But ultimately, that normal process exists, so it's really important that you don't see MTD that completely rips up the SA framework. It doesn't. It very much is a part of SA. And it is important that you keep those other forms of income that have to be reported in the tax return in the normal way. As I say, very much it will be within the existing process at the moment, but it will be done through new MTD application interface, so a new IT behind the scenes that will allow us to take that end of year tax return. And I think most importantly, we are on the 25th of March, and I've said this many times, a sort of well-known accountant in the industry says it's too late to be early, but it's not too late at the moment to get started. And I think most importantly, what we'll talk through today is the fact that you really need to take the opportunity to segment your clients. Ask yourself, do you have the software that's needed for MTD? Once you've got that information together, you've got the ability to set up an onboarding plan. So I would ideally like you to put some clients in to testing from April 25. I think it's the best way to get ready. It'll allow us to test assumptions, and it'll allow HMRC to test their systems, but it allows you to make sure your business is ready. The next best action is having a plan to sign up those clients, because if you've segmented the clients and you've thought about putting a few into testing, the next step is making sure you've absolutely got your agent service account ready for MTD. If you've got that set up for VAT, the good news is it's probably going to be a fairly straight map across one button exercise to map those existing relations. Just to say that is not signing up to MTD, that is mapping those existing relations to your agent service account. And lots of accountants show me that they're worried at this point because they may be mapping 100 clients across, and that's not into MTD, that's just mapping. It's a no regrets activity of mapping that into the agent service account. But once you've got the SA set up, you know you've got the software, then before April 26, having a clear plan to sign these clients up to Making Tax Digital is the next important action. And that will take roughly about 3 or 4 minutes per client. So if you're on the call today and you're in a relatively big firm, I was in Dunblane last week at an event and there was a few big firms, and you can see there is a lot of logistics to think about creating that plan to get ready. So let's just go over some of that plans. Work out qualifying income. So I've said to you today it's based in SA 103, 105 and 106, self-employment and property. And most accountants tell me we can do that now based on historical income. But if you're at all unsure, as soon as this tax year's ended, that will allow you to know for sure who will be mandated for MTD. So don't put that off. Start thinking about it now. When you have segmented that, it is important to note that we'll be writing to these clients over the next few weeks. So if you've had a letter to say your clients are likely to be in and you've not spoke to your clients, it's probably recommended, and Chris may touch on this later, it's a good idea to get out there before the letters land. So just if you can clock that information. Third point is making sure that you've got compatible software. Gov.uk or software choices pages, if you search Making Tax Digital for income tax software choices, all of the information's on there on who's ready at the moment. Most of the main providers are now ready, and the remaining large providers are ready from April. So I'm excited that the software is in a much better place than where it was previously. Just to reiterate, make sure your agent service account, that you've got one and that you copy across, you map those authorizations. It's not mapping to MTD. It should be for many a very straightforward exercise. And if it's working for VAT, it should be fairly straightforward without any real activity needed by the client, as we trust these existing relationships. If you've got new clients, you will have to consider the process, and there will be a digital handshake where the client will have to authorize that. But otherwise, it's a fairly straightforward process. So plan in and make sure you know where you're up to on that. And then it's about two things. It's about who am I going to put into testing? And we know now that many from the industry are enthusiastic and optimistic about putting people into testing. That's something that's changed over recent months as confidence has started to build. I think, and those accountants that are in testing at the moment tell me that it's the best way of doing it. And absolutely, just looking at the question, it's the same agent service account that you use for MTD VAT, and if it works in VAT and you've got those existing relationships, it'll work really seamlessly. So think about those clients. Who are you going to bring into testing? I'd love you to bring clients into testing. But if you don't want to bring them into testing, or even if you put a small pocket in, the next action is working out what is your sign-up plan, because you need to sign up these clients using the Making Tax Digital sign-up process, 3 to 5 minutes in advance of certainly August 26, but ideally before April 26. But you've got to that time before you put in that first quarterly update in the mandated year. So just thinking a little bit about why sign up early. There's no penalties, as I've mentioned, but you'll also get access to our fantastic customer support team. So if you're sitting there at the end of the phone or the end of the Teams chat today thinking, I'm not going to sign up because I'm not confident I'll get my queries answered, you've got my assurance that you will have bespoke support from a team who are experts in this field. So don't let that put you off. And it allows you to test your assumptions around how it will work. And most importantly, I would say, if you've worked out how the ASA is going to work, how that agent service account, how you're going to sign up, you've got your software ready. The next big question is, how are you going to work the quarterly updates? Recognising that they're unadjusted income and expenditure. That's a choice for you, and one that Chris may touch on later, but ultimately it's a choice that the accountant does it, the client does it, or you may wish to consider a service of a bookkeeper at that point. And we'll talk a bit about multiple agent access, something we've delivered later on. So testing how these quarterlies will work, because you need to bear in mind that when you do the quarterly update, you may have a quarterly update for one trade and you may have the quarterly update for property. So that can mean that in that scenario that you could have 8 quarterly updates, even in the basis that I'm saying that they are not tax returns. Just to be really straight with you, those are separate quarterly updates. So being able to plan these things through, I think, is a really good and sensible thing to do. So we've covered quite a bit of this already, but when you get into Making Tax Digital, ensuring you're keeping digital records, ensuring the quarterly updates start to flow. Now, these quarterly updates, the period for Making Tax Digital is either the calendar period, April in 3 months, or the 6th of April in 3 months. Every quarterly update has to be in by the 7th of August and the 7th of each month, 3 months thereafter. Now, it was originally the 5th. You may hear it's the 5th on some communications. You told us that didn't make much sense and it should be aligned with the VAT staggers where appropriate. So it is the 7th of August and every 3 months thereafter. So again, coming into testing gives you a really strong chance to test out those assumptions and that it's working. So Chris, we'll get to some questions in a minute, but if I had to summarise sort of 10 key things, and 10's a lot to ask anybody, and you can play this back again, and it may not be 10 because I'll run out of fingers at some point. But first thing is, make sure that your agent service account, you're doing thought around that. Make sure you're segmenting your client based on those income types, and it's self-employed income and it's income from property, box 103, 105, 106. Have you got software ready? Have you had a look at what it would be like to sign up a client? Bear in mind it's 3 to 4 minutes. The best way of doing that is probably putting a few into testing to start to test it. Have you made a plan for when you're going to sign up the remaining clients before April 26, and certainly no later than the first quarterly update in the 7th of August? If you've done those things, the next question is, how are you going to work quarterly updates? Who's going to do it? Have you got a plan, and would testing help you assume some of that information? And altogether, you're starting to get a bit of a picture there of the key things that need to be considered. I did mention for quarterly updates that we have developed a new product that you've asked for in the industry, and that is the ability to have multiple agents. So there will be a main agent, which is your tax filing agent, but you can, through a digital handshake, and this will be available in some software from April onwards, actually opt to have a supporting agent. Now, that supporting agent can't see absolutely everything in the account. It can't do final tax filing, but it can do the quarterly updates. And multiple agent access is something that we delivered into what we call our sandbox in December, and we're ready to go live on it from April 25, and that's a year earlier than we had hoped for. So for those that do wish to use bookkeepers or have supporting agents, for the first time, Making Tax Digital for Income Tax will build that capability, and we'll test that throughout the next few months so that it works even better in time for go live. So that's something that many of us heard is something that the system absolutely needs, and we've made some significant progress on. Lots more I could say, Chris, but I think that's probably enough without overkilling it, and then we get into the questions from here on in. Yeah,
absolutely, Craig, and thank you very much for that overview. It was great to remind everyone of what's coming, what they need to do, and sort of the initial things they might want to think about when discussing this with their clients, because it's now is definitely the time, especially for those businesses with the gross income above the 50,000. It can't really be put off. MTD is coming, and that's certainly the message that I'm seeing, and I think is now being understood. There's been delays in the past, whereas I'm as clear as I can be that April 2026 is not changing. It's not the can's not going to be kicked down the road. I would think that you would agree with that thought.
Yeah, yeah, absolutely. This is a really big program, and we've had some deferrals in the past, so people have been rightfully sceptical as to will it go ahead. There's been a lot of debate about parts of the policy, and I think over the last 2 years, we've worked hard to make it as supportive as it possibly can be. There's parts of the policy that people may disagree with, but fundamentally we're on track to deliver this by April 26. And anybody that banks on that not happening as a strategy for managing this is most likely doing both themselves and their clients a disservice. And that's the words from sort of accountants I trust in the industry. So we're absolutely on track. And today, hopefully, in the communications, the letters that are going out, the paid for marketing, all of that sends a signal that this is going to happen, Chris.
Thanks very much, Craig. I mean, got a few areas where I've been speaking to members about over the last few months, and they've been talking about how they're going to prepare their practice for MTD for income tax. One issue that crops up quite a lot is to do with the exemptions. So I'm thinking maybe there might be some businesses where the taxpayer is about to approach retirement and they think, oh, I don't want to get involved with this. Can I just apply for an exemption? And more generally, people are then asking, well, how can I apply for an exemption for a client that genuinely does have reasons, they're digitally excluded, they maybe live in a rural location and possibly might even be already exempt for MTD for VAT. Don't know if you want to share your sort of thoughts on exemptions generally, how that will work, and I understand that there's not a need to reapply for an exemption if you've already got one for MTD for VAT, and maybe a little bit more about how people will apply if they're for their clients that are trading below the VAT threshold.
Brilliant. No, it's a great question. Thanks, Chris. And so I think the first thing is that MTD exemptions, we've been really clear that if individuals or businesses genuinely cannot operate MTD for certain reasons, they won't be required to do so. And we've tested that very much in Making Tax Digital for VAT. So as you say, if someone has a exemption for MTD for VAT, that will persist and will still be applicable for Making Tax Digital for income tax. So that's the first thing to say in terms of to provide that wider reassurance. We will publish later this year full guidance on for those that aren't covered within Making Tax Digital for VAT, but actually because of their personal circumstances, they may not be able to comply. So this may be due to issues around disability, religion, location, and some other things, or a mixture of different things. And we will publish how you can actually apply for that. But there will be a set of sort of legal criteria, and we will be looking to, as much as we can, sort of follow the process that we did for Making Tax Digital for VAT. So fundamentally, in a nutshell, if you can't operate it within the legislation that we set out, we'll make that really clear and we'll give you a process to follow. And if you've got one for VAT, that sticks. Nothing to do on that front.
And there's a few other exemptions as well, Craig, that apply automatically, isn't there? Things like foster carers and taxpayers who don't have a national insurance number and so on.
Yeah. And we'll wrap all of that up within the guidance. But the big one that jumps out there is if you don't have a national insurance number by a set point in that tax cycle, you don't have to comply. And foster carers was another one that we've looked at, and we felt that actually it would not be the right decision. So we will package all that up in the guidance as it comes out. If anybody's got any specific questions on it, you can drop Chris and I a line and we can pick up. But yeah, keep an eye on gov.uk, and ICAS will also, I'm sure, through their guidance, be really clear moving forward on that as well.
Yeah, thanks very much, Craig. And you mentioned earlier on about raising awareness, and I know that you're very active on LinkedIn, and I think a lot of our members and other tax professionals have been, they appreciated the fact that your door is quite open and that you've got that in there. I mean, I'm assuming that there will be a program of other publicity as April 2026 draws near. I'm not envisaging you dressing up as Hector the Inspector from the old days for those of us who can remember what that was like. But I'm sure there'll be something a little bit more fit for the modern age to promote this amongst the wider community, perhaps those who don't have accountants at the moment that our members might be approached by if they need some support when it comes to dealing with MTD.
Yeah, absolutely. So the vast majority of people in the first cohort of 50,000 have got accountants. But if you had to say to me as the director of the programme, what's the thing that I think about most? It's how do we support unrepresented customers, and that is through good advice, good guidance from HMRC. But some of those may wish to consider whether an accountant is a good thing to consider. Not for me to tell them that, but certainly for them to consider. But in terms of getting the message out, there's a bit of irony in Making Tax Digital using letters to update people, but it still has quite a strong behavioural impact to help people get ready. So as I've mentioned in some of the speaking slots that I've done, the first thing I wanted to do was make sure that we got letters out to accountants to say these letters are coming. So if you don't take anything away from today and you've not already heard that, be aware that clients will be getting letters based on their income from the 23-24 tax year. So we've started that outbound campaign already. We've started paid for marketing also. So you'll hear some, if you perhaps are online or you're on Spotify or something, you'll start to hear in particular campaigns focused in at the construction industry scheme. The construction industry scheme, a lot of people within MTD are part of that customer segmentation. And interestingly, that's something that MTD really unlocks. Actually, we provide better data than the current SA system, and we'll be able to pre-populate information around CIS deductions, for example. But we will be right now communicating out there with that customer group. So you will hear and see marketing, and that will amplify and ramp up throughout the summer. So there isn't a large-scale TV campaign, but there is large-scale trade media, radio, online, paid for marketing and advertising. There'll be lots of free and social media work we'll be doing, and we are, in the last few weeks I've spoke to genuinely thousands of accountants in only a few weeks. So me and the team are out there across the UK doing our absolute best, as are professional bodies. But so will the software market. They will work with their users and the accountants they work with, both to help on board, but also to help spread the message. So it's not just a government endeavour. It is, for this to be successful, it's how HMRC, how professional bodies, how accountants, how software spread that message. So, short answer is we've got lots planned, but certainly don't hold your breath. You won't be seeing Hector anytime soon.
Maybe that's a bit of a relief for those of us who can remember the days of Hector in the past. And you touched a little bit about once a business is mandated and they're in for 3 years. And I think that's maybe an area that people maybe don't realise quite how it works, in that the income for the current tax year and how that sets the goalposts. And there's actually a question in the chat that someone's quite rightly flagged, the fact that investment income doesn't need it. We're only looking at sole trader income and income from property, not income from partnerships or employment or dividends, for example. But once they're in, they've got to be prepared to deal with the obligations that MTD brings for 3 tax years, don't they?
Yeah, absolutely. So if we take it back a step, right? So the fundamental eligibility is based on self-employed income and income from property. And I'll keep repeating that because everybody is incredibly busy. I live and breathe this. You've got businesses to run, individuals and companies throughout the UK to make more effective, I get all of that. So ultimately, I'm really relaxed. We need to constantly share that it's SA 103, 105 and 106, and it can be a combination. But if you do have other income sources, you will have to wrap those up as part of the normal tax submission, which will be done at the end of the year. We will make that submission easier because we will pre-populate your quarterly updates. We'll use the quarterly updates to, depending on your software, nudge and prompt you to make it to make it as accurate as possibly can and help along the way. We will also provide tax estimations. Now, I've spoke about this, that 2 people are probably respect most in the industry. One person loves the estimator that's part of MTD, and it's not just your quarterly update, it's other data sources we hold. And another person I respect really highly says it's, in many cases, it's inaccurate, so I don't particularly like it. We're really clear that it is only an estimator, but anything we think we can nudge, help clients and customers get their tax right at the end of the year, we think that's a good thing. So you're only in through your self-employed income, your income from property, and that's where the obligation around digital records sit, and that's where quarterly updates sit. But when you do your final submission at the end of the year, you have to make your adjustments, do your normal accrual process, whatever you have to do at that process, including reporting other income, and we will pre-populate a significant amount of that as well. So yeah, in a nutshell, I don't think we can say that too often, Chris, and I don't think we can say it's the combined income, because people don't clock, and they may look and say, actually, I've got 45,000 from self-employed income and 20,000 from income from property. That client's okay. Well, no, they will be legally mandated because the joint
you need to add the two together.
income. You need to add the two together. Again, sounds straightforward, but appreciating loads of people are busy out there. These are just some of the basics that we just need to constantly share with people. And thanks for the questions that help us sort of open that discussion up.
Yeah. I mean, I know a lot of people have also got confused in the past about it being gross income, and we've been stressing that in the articles that we put on the ICAST website as well. You touched a little bit about multiple agents, and I think a lot of our members might be in the scenario there's going to be each practice, and you are right to say how they need to look at the client base, and I think the solutions for each client will be different, because there'll be some firms where they will do everything. They'll do the quarterly updates, the bookkeeping, and the year-end VAT returns and so on, that comprehensive all-round service. But you might have someone who has a client who have got a bookkeeper to do the quarterly updates, and that's now going to be possible for them to do that, have access to the information that they need on the quarterly updates without revoking the mandate that's in place for the main agent who will be dealing with the year-end and everything else.
Yeah, spot on. I think the thing to remember is that the main agent still exists, so they have access to all the MTD services, and they will be the main filing agent. The supporting agent will have a level of restricted permission, and they'll only be able to undertake certain activities on behalf of the client, such as submitting the quarterly updates. We co-designed these permissions with industry, both accountants and bookkeepers. So one of the interesting things is that as the main agent, you'll see what's filed and you'll have full view of that, but you won't perhaps be able to see what we call designatory, the personal details of the supporting agent, but you'll certainly be able to see what they file. So no worries there from an agent perspective. And just to pick up, Chris, on the chat, I think John put a question in about quarterly updates. Are they fully adjusted? Do they have accruals, prepayments? These are, at their most basic form, unadjusted, light touch updates of income and expenditure. Now, should you wish to use the system to be more sophisticated, it is possible for you to take it further. So people do talk about, the fees associated with that, and it may well be, and this is where I am absolutely well out my pay grade and my area of expertise, but it's not for me to tell the industry how to charge. But as a general sort of rule of thumb, there may be additional work, and it may be reasonable to have a small increase if people, and if accountants think of it as 5 tax returns with all of that activity, which is not, and they had to increase their costs in alignment with that, then I think that would be a surprise to clients out there. It's more your area, Chris, but I think getting across what it isn't, these are not tax returns. And then it logically brings the question of, well, what's the point of them? That's the next question people ask me. And I genuinely believe they fulfill about 4 different things. One, we have too much of a small business tax gap and self-assessment in the UK. The process is too long, and we believe digital records really helps lower the tax gap. So fundamentally, they're there behaviourally to make sure this is happening, but that's just a tiny part of it. They do allow us to build nudges and prompts through software to help people get their tax. They allow us to better estimate tax. There's a whole host of things that, in terms of when you get to the end of the year, the end of the year tax return should be theoretically easier. So when people say out there, and I kind of try and not get deep into the why quarterly updates debate because we've baked that in, we've moved past it. But fundamentally, anybody that says the information's useless, it's not used, that's not true. Actually, it's used in many ways, but they are not full tax returns, so they're not fully adjusted, they're not fully accrued, depreciation isn't added, etc., etc. So again, just a sort of key learning point that they are unadjusted income and expenditure only at this stage.
That's good. And just to expand a little bit on multiple agents, just so everyone is clear that the supporting agents you might have, depending on the nature of the client and the number of businesses they got, but it is possible to have more than one supporting agent, isn't it? So if a taxpayer has a self-employment and a property portfolio.
It is absolutely fine for that to be the case, yeah.
Thanks, Craig. There's a really good question that's just came in, and I think it just homes a little bit on the 3 years point that once you're in. And the question is highlighting the fact that the 24-25 income might be above 50,000, but if income in 25-26 drops, quarterly updates will still need to be submitted until March 2029. I think that's a point as we're getting closer to mandation that people need to be really, really clear about. You know, if there's any tax planning that's carried out, you know, someone is going to buy some plant and machinery, they might decide to buy, you know, if that's going to be a factor in it, they might take account of that when it comes to their income for 24-25.
Yeah, and let's be, and you've probably been part of some of these conversations, Chris, that we sort of sweated this long and hard. What is that lock-in period, and what's the sort of pros and cons? And it's like anything in life. I guess you could have 100 people in the room, and different people would have, or as we've got today, 177 right now. But different people will have different views. But we felt that for confidence and consistency, the 3-year lock-in, if somebody ceases to trade, then obviously that cessation will take care of things. But ultimately, if you're in, you're in. You do have to continue to report in that period, and you will be legally required to do so. And I do think that there's probably a lot of edge cases where we'll maybe learn over time to say, actually, we never quite fully understood that. We'll sort of keep this under review as we go. But at the moment, if people can plan for the 3 year as a lock-in for the reasons of consistency, and having that ability to plan. If we find something that we've not anticipated, then we're certainly will keep our minds open. But at the moment, 3 years you're in until those 3 years are up or you cease to trade.
Yeah. Thanks, Craig. Just to expand a little bit on software, two things often crop up when I'm speaking to members about software. The first is about the software list. I think we did have a question in the Q&A about if you got a particular source of income, how do you envisage HMRC software list, making it clear what software options that you could choose from that could attend to that. And the other aspect that often crops up is free and or bridging software for those taxpayers that are maybe more straightforward at nature of affairs, for them to be able to deal with that in a cost-efficient manner for their business.
Yeah. So let's start with bridging software. Actually, unusual that I went through a whole presentation and I never mentioned it. So some of the products within Making Tax Digital are bridging software, which makes, as long as they're approved and they've got the necessary digital links, it means that spreadsheets are absolutely an option for people. So the software choices page at the moment describes that. We think we can be much better at describing that and a whole host of other things. So we're co-designing and working really hard behind the scenes, but also taking advice from industry, recognizing that advice and that guidance has to be significantly more interactive and intuitive and supportive. So watch this space. I think the main thing to say is at the moment there is good products. We've got 16 products in testing right now, 2 significantly big products ready to come in April as well. You know, if you're using a product at the moment, have a chat. They are open and they're very much looking for accountants to help them test their products as well as testing MTD overall. So we'll do our very best to make that guidance as good as it can be, but don't hesitate to talk to your software provider. And you know, fundamentally, if you feel there's any challenges there, get the feedback into Chris as your professional body. Chris has got a direct line both into myself, and I'm happy to convene sort of conversations with industry, because I must say when I took over Making Tax Digital, I think the software industry had a sort of challenging time around Making Tax Digital for income tax, and we've worked really hard together to be in a much better position. So, you know, I recognise that, you know, we need to build these things together and work as a sort of partnership. So if my words say one thing and it feels different out there in the ecosystem, do let Chris and I know and we'll respond to that. And just while I've got the mic, Chris, there's a question in about partnerships. And just to be really clear that partnerships are not currently part of the Making Tax Digital scope, and they're certainly not in my immediate gaze to be doing anything, and we'll give a reasonable lead-in period before we transform the partnerships landscape. So if you're in a partnership, then ultimately partnerships aren't contained within Making Tax Digital. Yeah. It is possible though that you can have partner income and still have in scenarios income on the 103, 104, and you may have to report that partner income as part of your end tax year return, but don't confuse that with partnerships are not part of at the moment. Yeah.
And I mean, that touched on something that a member spoke to me about in the last couple of weeks, was that he had a client who was self-employed sole trader, considering becoming a partner or forming a partnership with his wife. And by doing that, that would then mean that the business wasn't within the scope of MTD. I mean, I don't know if you have any thoughts on that. I mean, my own thoughts are around the fact that there are costs associated with running a partnership, setting up a partnership, and that has to be borne in mind in terms of any savings that might be achieved by not being involved with MTD.
Yeah, and the reality is, if you wish to create a legal partnership and you cease your self-employment income or your income for property before the date of legal mandation, then that will mean that you're not a part of MTD. And I'm sure some people may choose to do that, but there's a trade-off there on the basis that you've just said, Chris. So if that is your plan, which, you know, I'm not close enough to understand whether that is a genuine one, then you need to make sure that it's timed and that your business is ceased in the correct way within reasonable time. And just, Chris, another one that popped up that I've been getting a lot when I've been out in the sort of external tour is this sort of disparity between VAT quarters or staggers and old money. I think do we still call them staggers? I think certainly behind the scenes they were always called staggers in HMRC. There is some people that their stagger will map lovely with this. There is some software that offers a product that's supportive. You know, so the consideration is if your VAT quarters are different, they will remain different. It's just a reality that's built in the system, and you need to be able to work out your software, how supportive that software is to running both Making Tax Digital for VAT and Making Tax Digital for income tax. And I think that'll emerge over time. I certainly can see some people in the market looking at how they can build a supportive products to both, but I think somebody did ask the question.
It's one that we've been asked a few times as well. I mean, I suppose it comes around that sort of the whole theme of the time period for MTD for income tax, and the deadline takes account of the VAT deadline, but that is only relevant the VAT deadline is only relevant if it's the same stagger period, if it's a different VAT reporting period to the quarters. I don't think we touched earlier on, but a few things that spring to mind from a sort of practical housekeeping point of view on the actual quarterly updates themselves. I'm thinking the smaller businesses in the 3-line reporting, and also the need to submit a calendar election if you don't want to go with the reporting periods up to the 5th of the quarter as well.
Yeah, and actually, I would, starting with the calendar election, that should probably be in the 10 things to think about. Actually, it's that important. So you need to make sure that your software supports it. Most of them do, and you need to make sure that's selected before you get deep into the process. So, Chris, I think it's brilliant that you've reminded me that. If I had more concentration, I would have definitely had it part of my 10 things to remember. So thanks for raising that. We've said 3-line accounts, that they still exist, and I think the other thing we never covered is if you've got joint property, there is some easements in terms of the deduction reporting as part of the quarterly updates. If you've got joint property, we recognise it's a bit trickier. So for some, that easement, and you can go into gov.uk and have a look at that, and we'll publish more guidance, and I'm sure Chris can advise on it. But again, these are things that hopefully you can see demonstrates that, you know, we don't sit behind a wall in Parliament Street. This is a policy. We have sincerely tried to listen. There'll be always parts that we disagree on. I'm sure that will be the case. But I'm conscious of time, Chris, and I was just thinking about, you know, that ask that I've got for people, and anything we don't answer on here, we will make sure we answer and we go out. But that thing about, is it worthwhile coming into testing? Why would I do that? And as I say, lots of accountants that have tested the service absolutely stand by it's a really sensible thing to do. So, you know, hopefully there's a few sort of learning points people have taken away. But I would, you know, my personal ask for people is the best way to get ready is to join testing. Most of those income sources have opened up, so the eligibility is really rich from April. Software's now there. I would really appreciate if you do have the ability to bring some people into testing. I think it's a win-win for
there's extra support as well, isn't there, Craig? Only for I think it's quite important to be clear that if a firm puts 5 clients in, it's only those 5 clients that benefit from that extra support from the HMRC MTD customer services team, isn't it?
Exactly. They do go a bit further. So for the client, any income tax help, the team are brilliant. They'll be able to give them that. But it's no way bespoke expert help, but it's for the people that are in testing. And, you know, we think that's a really good benefit for jumping in. And you've got my assurance if things go wrong, we'll support you, and there's no penalties as part of those quarterly updates as well.
Yeah, and I think one of the issues about joining the testing that people were maybe hesitant before was the need to do a digital handshake for existing clients. And I think you spoke about those clients already in the ASA for MTD for VAT, but also important that our members are aware that they don't have to, if it's an existing client in the legacy system, that they can copy across that authorization in general, but also if they wanted to get involved with the testing fees.
I think it's a point that I try to make. And, you know, if you're thinking about the multiple agent, there's a digital handshake. If it's a new client, there's a digital handshake. But if it's existing relationship, it's really straightforward. It is quite literally a click of a button. And don't think, because it might say you're going to map 100, 1,000, that's you into MTD. You have to go through a 3 to 4 minute process to sign these people up. We've made it really easy. So the way that I think Rebecca Bennyworth described it, no regret action, get it done, get it in the plan. So segment the clients, make sure you've got software, make sure your agent service account's good, get a plan for coming into testing and also signing up for April 26. Work out who's going to do the quarterly updates, and just appreciate that, you know, if you get it wrong, those quarterly updates, they're cumulative, you can correct them the next time. So a lot of the debate is how accurate do they need to be? And we absolutely use the information as I've set out, But it's absolutely my sort of demeanour to be supportive as we work through this together. So if people do get it wrong, can we correct it the next time? So it is a supportive stance for HMRC in my perspective. But I think that's us, Chris.
Yeah, I mean there's lots of questions that are in the Q&A, and I'm sorry we didn't get time to get through them all. I mean, it's one of those topics. It's a really interesting subject matter. I mean, last message before I wrap up everything on the registering, that it's important to be aware that you talked about the 3 to 4 minute process for each client. That actually has to happen ahead of April 2026, but you should be able to do that from April, so that in just over a week's time, you should then be able to register those clients for MTD, even though they're not coming in early. So if you decide for those clients who want to go on the testing, great, you can test that out for your clients. That's brilliant. But for those clients that you decided as a firm, or the clients decided they don't want to come in early, you still have the option to register them early, so that admin burden of registering them can be spread throughout the next tax year.
Yeah, it's really important. So when you come in after April, you've got an option of signing up for the testing period or signing them up for the first mandation year. And we've gave the whole year because there are some firms that are, significant in size, and it's not a small feat to get those sign-ups done. So while I say it's relatively easy at 3 to 4 minutes, and we've really improved the service, if you've got 1,000 of those, that's 1,000 times 4 minutes.
Yeah, absolutely. Well, thank you very much, Craig, for joining us and for giving us such comprehensive coverage of lots of different issues that our members need to be thinking about when it comes to preparing their practice for MTD for income tax. Sorry we didn't have time to go through all the questions submitted, but we will compile a Q&A document which we'll upload alongside the recording of this webinar on icast.com over the next few days. Please remember that you can keep up to date with all the latest tax and other professional news, including the latest information guides and resources on our newly updated website at icast.com. As I said earlier, keep an eye out for our new MTD Hub when that goes online. You can access technical support as well through the ICAST Technical Help Desk available through our website. This covers audit and accounting, tax, practice support, AML and ethics. It would be great if you could leave us a rating for today's webinar in the poll appearing on your screen shortly. To allow you to do that, we really appreciate your feedback, so do please take a few moments to respond before logging off. Looking ahead, we have a range of events in the practice and tax space in the weeks ahead, which you might want to sign up for. We've got the spring tax update on the 1st of May, and the first update in the series, which is on general tax update, where my colleague Susan Cattell will have the first in the 2 spring tax updates. This one is covering the key developments in personal tax, corporate tax and VAT. This will be followed by part 2 on the 14th of May, which is going to cover employment taxes and owner-managed business taxes as well. My colleague Justine Ricomney and I will be giving you the latest updates on that. And both spring tax updates will include any announcements or changes that might be announced in the Chancellor's spring statement, which is taking place tomorrow. In-person events on the 23rd of April, we've got the ICAST Sustainability Summit. You can join us in person in London for the ICAST Sustainability Summit 2025 for invaluable insights into the upcoming UK sustainability reporting standards and how they may impact achievement of net zero. And in June, we've got 2 in-person events. From a practice perspective, we have our practice management course in Edinburgh on the 3rd of June and our ICAST practice conference Thrive in 2025 in Glasgow on the 11th of June. Links to sign up to all these events are available in the events section of our website. It only leaves me to thank the HMR team for their insight today, and of course you, the audience, for joining the webinar. I do hope it's been useful to you. So until next time, it's goodbye.